Creamer Media's Mining Weekly is speaking to Trevor Raymond, the Director of Research at the World Platinum Investment Council. Trevor, your Platinum quarterly release mentions COVID-related and operational disruptions in 2021 that have had an effect on supply. Can you describe more specifically what these have been and why they are likely to settle in 2022?
Yes, we had two real issues that played out in 2021. I think firstly, we saw operational disruptions due to COVID in 2020, and those were less so in 2021. But certainly there was some operational impact, absenteeism, etc. So supply was reduced slightly at the mining level. The second big issue that played out in 2020, you'll recall that the Anglo-American Platinum converter was offline for a couple of months earlier and then later in the year. And that resulted in quite a large backup of about 560,000 ounces of platinum. And we saw that starting to come out in 2021, but it really accelerated towards the end of the year. And by the year end, that was almost all processed. So what we had is that we had mining still at levels potentially a little bit below pre-COVID levels, but a massive boost to refined production that came out. And a lot might have assumed that the high margins being made by the PGM miners caused that, but it was actually the release of that material that had built up. So we think there's still a little bit, about 150,000 ounces that's locked up in the process pipeline that should come out in 2022. But certainly that boost is gone, and we're seeing mining refined supply at more normal levels, Martin.
And since COVID restrictions have been lifting throughout 2021, what was the effect on platinum demand, particularly in the industrial sector?
Thanks, Martin. In 2021, we saw massive demand from the glass manufacturing sector. The expansions that were planned in 2020, many of those moved into 2021, but certainly they did happen. So you had this massive increase in demand as the capacity for both LCD glass and a lot of glass fiber, particularly in China, was put in place. So that's largely run its course, and you'll see some of that glass demand getting back to much lower levels in 2022. And then you've had things like petroleum that were heavily affected. In 2020, obviously global use of gasoline was significantly down. That picked up during the course of 2020, and certainly we saw, for example, petroleum demand coming back. I think those trends will filter through to 2022. Obviously, there's a lot more uncertainty at the moment. But certainly strong industrial demand in 2021, likely to be a feature in 2022 as well.
And in the automotive sector, the shortage of semiconductors has had a considerable impact on platinum demand. When is this likely to be resolved, and what will that mean for a long-term platinum demand?
Yes, Martin, certainly the impact on automotive production was quite severe. I think we saw almost 10 million less light vehicles produced in 2021, and certainly the estimates for 2022 is about 7 million less. So that's 17 million light vehicles that didn't get produced, and that certainly had a massive impact, quite an impact on palladium, because globally most vehicles are gasoline, but certainly an impact on platinum. And you might have expected that huge reduction in the number of vehicles produced to play out heavily in platinum automotive demand. And in fact, we saw the converse. We saw demand growth in the automotive sector for platinum demand in both 2021, and we're forecasting another significant rise in 2022. And the reason is that there's much higher loadings per vehicle as new emissions regulations are brought in, particularly Euro 6D and China 6A and 6B. And then in addition, we've had a lot of platinum substituting palladium. And both of those effects have offset the huge reduction in vehicles produced. And as a result, we've had growth in platinum automotive demand. In terms of how that plays out, we do know that there's strong pent-up consumer demand. We've seen a massive increase in the price of second-hand vehicles. And also we've seen the automakers reduce the inventory in their distribution networks. So we believe as those things start to be resolved, and certainly they were being resolved until recent events, is that there's certainly pent-up demand. So automakers are likely to produce more vehicles to meet that demand, and also to fill their distribution stocks. So certainly as any easing occurs, we could see quite a significant increase in vehicle production, Also, that would be at much higher loading levels and with ongoing substitution. So certainly the potential for significant and quite short-term quick growth in automotive demand, Martin.
And to what extent have imports into China had an effect on market dynamics?
Well, that's probably the most interesting aspect. I know we flagged this in November that imports into China were particularly strong, but what we saw, particularly in the last 3 quarters of last year, is that imports of platinum into China were significantly higher than identified platinum demand in China. And over those 3 quarters, the amount of that excess import was over 1.3 million ounces more than China's platinum demand. We have had confirmation that a lot of that is associated with speculative or quasi-speculative holdings. And Martin, we've seen this before. You might recall both in 2014, when we had a significantly long strike in South Africa, and also 2008 and 2009, where there were concerns about availability. So what tends to happen is people in the supply chain, manufacturers that use platinum to make industrial goods like bushings to produce glass fiber, or even jewelry manufacturers, they increase their stock levels, but often quite significantly, like a multiple of their stock levels. And that's a speculative view, but it's a fairly low risk for those participants, because if the price goes up, that's great. They have made quite a turn, and getting in at platinum at lower levels makes a lot of sense. If the price stays where it is, there's really no loss, because they'll take that metal and they'll turn it into product down the line. What we also know is that metal going into China tends to stay there. The export of refined platinum and palladium out of China isn't currently permitted. So what we have seen is that that amount of platinum that went into China, over 1.3 million ounces, absorbed the entire surplus. I mean, we're publishing the surplus today of just over 1.2 million ounces. That's the biggest surplus in platinum we've ever published. Yet we've got this conundrum that China has actually used that up. It doesn't appear in our supply demand data. And we saw that evidence, the increased lease rates and the rundown of NYMEX stocks. People that were unable to get metal were choosing to take stocks out of NYMEX inventory and use that to satisfy demand for physical. And we see that continuing right now. We don't yet have the China import data for January, but it certainly looks like that elevated lease rate and the reduction in NYMEX stocks suggests that China continues to import more than it uses. So a very big driver that kind of puts a bit of a contradiction into a market that's in massive surplus yet tight.
And 2021 saw a big change in investment demand. Could you explain this and give your thoughts on how this might change again in 2022?
Yes, Martin. I mean, we saw in 2019 and 2020 significant growth in platinum ETF investments. I think over 1.5 million ounces in those 2 years. Obviously, we'd done a lot of work several years ago to get a lot more stock from the refiners in Switzerland into the bar and coin distributors into the US. So during COVID, we saw that massive, nearly 500,000 ounces of bar and coin, a very strong bar and coin in 2021. And we think that bar and coin strength is likely to continue. However, in ETFs in 2021, we did see that those holdings reduced by over 230,000 ounces. And we also saw those NYMEX stocks being drawn down. And that reflects in our supply demand numbers as negative investment demand or a reduction in investment demand. And that's interesting because it's the issue that I described related to the China imports. And what we also noted is that a lot of the reductions, many of the South African funds are very long platinum, and what they were doing was rotating out of the ETFs into the mining equities. And I think we flagged that strategy, and almost it seems to have been confirmed as a very sensible strategy. We've seen massive dividend declarations from those mining companies. So in terms of where it went, we had this massive drop in investment demand. Where it's likely to go, we're forecasting a modest 50,000 ounces for investment demand in 2022. But we do know that the potential to rotate out of those equities back into the metal occurs. And what we have seen is that as these platinum mining companies go ex-dividend, that there's a greater likelihood for those people to switch back. I think the other interesting thing is that we noticed that the influence of investment demand when you've got a tight market certainly makes investment demand growth more relevant to price discovery.
And finally, given the developments in the sad Russia-Ukraine conflict, what are the possible impacts on the market balance for platinum?
Yes, Martin, I mean, I agree absolutely. It's sad to see the Russian invasion of Ukraine, and recent market prices have sort of indicated their level of concern. We know that Russia only supplies about 10% of globally mined platinum compared to 40% for palladium. So obviously the concern is much more acute regarding palladium supply out of Russia. But even so, 600,000 ounces of platinum comes out of Russia, and we expect a short-term disruption to that associated with sanctions. And that comes at a time when we've got this incredibly tight market. So I think the concerns are there. I think the investor interest is extremely high. We think that the shortage of palladium is likely to encourage additional or accelerated substitution of platinum for palladium, even though we think over time commodities markets tend to be quite efficient, and the amount of palladium produced by Russia is pretty similar to the amount of palladium that is consumed by China. So we think there is a bit of a deficit that certainly could be alleviated by substitution, and that will take time. So I think in the short term, we're likely to see a lot more volatility. Markets are certainly reflecting that right now. And then in the longer term, I think the interest in the Russian energy supply to Europe, and if more green hydrogen can be produced, you could put 20% of green hydrogen into the existing gas infrastructure, and that would halve Europe's reliance on Russian gas. So I think longer term, there's certainly a boost to the importance of green hydrogen, and that's always good for platinum in the production of green hydrogen, but certainly in fuel cell electric vehicles. So I think a lot of short-term volatility, certainly some potential long-term benefits as well, Martin.
That was Creamer Media's Mining Weekly, speaking to Trevor Raymond, the Director of Research of the World Platinum Investment Council.